Hello? She never mentions word addiction. Hey, anybody there? Insert a company. Hey, sorry, my computer demanded a reboot, so I'm just firing things up. Opening the chat. I have to get my trading platform up. Yeah, she talks to angels. All right, let's see how this is going. Well, you know what? Let me just run the intro. 3, 2, 1. Hey, good morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, y'all. Hi, my name is Wayne. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay.com today out of loyalty and respect to these webinars if they are helping you. And if they are, please download a demo account. And with that, then you can download MT4, check out the execution speed, check out the spreads, and of course the amazing swaps. If you want an ECN account, great, you can have it. If you want a variable spread account, great, you can have it. If you want a fixed spread account, great, you can have it. It's your way at Trader's Way with Trader Win. So today we'll do dollar pairs, yen pairs, gold pairs, dollar pairs, oil pairs, any pairs, whatever pairs. So get involved, ask questions. Also, if you do feel that these webinars are valuable content on YouTube, would you please do us all a favor and smash those like buttons? It's important. It simply tells YouTube this is good stuff. Okay, don't do it for me. Do it for you. Okay. Anything else going on? Think I made 1,000 pips today. You're welcome. Anyways, let's move on.com. Ciao. Hey, Rizwan. Yeah, I'm just trying. I'm just trying my best, brother. All right. Cool. Okay. So is it fair to say 16 weeks ago I said this week the markets would come down and the yen would be strong? Is that fair? Is that a fair statement? At least 16 weeks ago, we said this particular week the yens would get strong. Is that fair or is that an overstatement? Jean-Guy sure is. No, and Jean-Guy, Jean-Guy's a swing trader, and we're kind of goofing in the swing trading group yesterday. I'm like, I never know why. Right? I'm like, every year it's something different. I said, it's going to be something that's unexpected. It's going to be something like Trump's going to come out and say, look, he doesn't want to do the deal, and everything comes down. I'm like, I never know what it is, but every year it's something. And then all of a sudden everything gets justified, but whatever's going to happen is going to happen. But I never know the real catalyst. Last year it was the Fed. The year before it was something else. And all of a sudden, boom! An Iranian general gets assassinated by the United States. Boom! There it is. Don't know why. Never know why. Okay? So anyways, that's cool. So what about all the people that didn't answer? Yeah, it's true, right, Reb? It's amazing how the fundamentals predict and then the technicals like show up to the dance, and right? And it just all works out. But it's nice to be able to see ahead. So really, seriously, only 2 of you are on the clue train? Well, bad coach. Bad coach. Jimbo, for now, you want to see Wayne, you want to see, all right. These are the ones here. Oops. So we can go through them, but like Euro Yen shorted at 122, we're at 120.50, so that's up 150. Aussie Yen shorted at 76, it's 75 now, actually 76 and a half, so that's up almost 150. Kiwi Swissy shorted 65.30, this is 64.80, so that's only about 50 pips. Pound yen shorted about 144. We're at 141, so that's over 300 pips. So 3, 4, 5 or 600 pips. Does that make you feel better, Jay? Yeah. Cool. So, anyways, Joe says you've been telling us for months. Yeah, cool. Well, you're welcome. All right, so whatever, let's just go through our charts. So we have how do we say this? An exogenous supply shock. So let's change the template. Let's just make sure we're all here. Let me get out. Okay. And by the way, what I'm about to do generally works with any geopolitical risk, but in particular out of the Middle East. Thank you, Prince. Yeah, right on, Jay. All right, here's my drawing tool. Okay, so any geopolitical risk out of the Middle East. Okay, great. So we'll call this oil, and we'll draw our chart. This is the quantity of oil. We'll call them barrels. And this is the price. We'll call these dollars. Okay. And demand will be constant. So we'll do this as D star. And then we will do this as yesterday's supply of oil. Now remember, call this supply 1. Remember, the markets are always in the future. We're not talking about today. We never are. That's why I think like amateur traders that are struggling, they're always trying to like catch the move today. They're always thinking about today. But actually the markets are always pricing in the future, whether it's the stock market, the bond market, the currency market. We're pricing things in the future. Okay? Yes, Ed, I'm doing a supply and demand chart. So, the worry here is that with this assassination of an Iranian general in Iraq, that there's going to be some geopolitical tensions in the region. Nobody knows what that is, but risk is risk. And there's a lot of oil in the region. So we're not worried about Iran's oil because it's already embargoed. We might be worried about Iraq's oil, but what about, sort of cause and effect? What could Iran do in retaliation? Well, of course, they can attack the United States, very unlikely. They can maybe attack some of their neighbors who are friends with us. I heard on the radio today, like, oh, they might attack our forces in Afghanistan. I'm like, why would they do that? Right? Close Hormuz. Okay, great. There's one great. Close the basically the gates to leave the Gulf with oil. Sure, and that really would mess up with Dubai, and Bahrain does mostly gas, but whatever. But what if they attack Saudi Arabia? We already know they've been practicing. They attacked Saudi Arabia, what was that, 4 months ago? But they do it big time, right, Ed? And so we don't know what they do, but that would be the easiest thing, wouldn't it? Just, okay, that would be the easiest thing. So whatever is happening, or whatever does happen or doesn't happen, what's getting priced in now is that the quantity of oil changes. Okay? This is yesterday's quantity. In the future, what if the Strait of Hormuz is closed or Saudi Arabia is attacked and they're taken offline? The supply of oil in the future might go down. That's all is happening. So we shift from, right? We shift the curve. It's not a move along the supply curve. We shift the entire curve, okay? Which then takes us to quantity 2. You see quantity 2 is less than quantity 1. And if it's helpful, I could label this a little bit differently. I can call this, 1M, 2M, 3M, 4M. Oh, that's supposed to be 4, 5, 6, 7, 8, 9. So anyways, we went from 5 to 3, okay? Now, the interesting part of that is the change in price, okay? The change in price. So the old price, would have been at P1. The new price with the smaller quantity would be at P2. And you'll see that price went up from whatever you want. Let's call it 40, 50, 60, 70, 80. So we went from 50 to 70. Okay? You see what I mean? That would be what's getting priced in. Not that it's happened, not that we lack supply suddenly, but the threat to supply in the future. Now, for extra bonus points, what do we call this? Hussein says Econ 102. Yeah, probably. So what do we call this then? What's the extra bonus points? 3-word answer. Yeah, it is probably, depending on how old you are, right? All right. Yeah, hey, you're welcome. Yeah, well, if you were taking this class at Harvard, it'd be $5,000. So this is cheaper than Harvard. Oh, what kind of supply shock? Surge is on the way. Surge only gets half bonus points. ESS, you got it. It's a big word to spell. TBM has it. Highlander, no. Then how would you label this chart? What is the name of this model? TBM's got it. External, no, close. It's a better word than that. It's a better word than external. Exogenous supply shock. Thank you, TBM. TBM's got it. Boom. Nailed it. There you go. Exogenous supply shock. And of course, I have this game where every time your professor says exogenous supply shock, you do a shot of tequila. Serge says can't spell it. Nobody can spell it. But you can spell exogenous supply shock. Yeah. So undergrad. So undergrad. Anyways, cool. So let's change the template. So that's what's happening now, guys. I would expect... the consequence to all this is I would expect the stock market to come down today, the bond market rally, oil prices to rally up, but other commodities probably to fall. And I would also expect the Japanese yen, the Swiss franc, and US dollar potentially strong. Oh, snap! Isn't that what we talked about yesterday, the day before, 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 and the day before that? Yeah. You're welcome. Cool. So let's start with the yen. So under this supply, and by the way, if you're taking notes, anytime you believe there is a large global geopolitical event, especially when it comes to, Let's say oil, especially, but it could be like China threatening to bomb Japan over some godforsaken island that nobody actually wants, right? Something like that. Like the threat of that usually isn't that important, but like if the Chinese killed somebody, killed a Japanese general, okay. So, we just went into Iraq, not even, right? The Americans just went into Iraq and bombed like a very famous Iranian general. Like bombs were flying, right? That creates a real, right, response in the markets. There's a real threat potentially to oil supply, to some sort of counterattack, which could also lend to more risk off. Do you understand? None of this says risk on. Like, hey man, now I want to invest. Do you understand that? Like this is, anytime you're in a situation where a billionaire says, you know what, I changed my mind, give me my money back, and they pull it out of a project, that's going to shift money away. Well, what have we been doing since the third week of August? Deploying capital. You understand? Since about the third week of August, we've been deploying our capital, putting our money to work. Right? That puts our capital at risk, and therefore the return, we should receive a return, right? Now, in these market conditions, many people will say, I don't want to deploy my capital, I want to protect my capital. So they take it out of all those investments. So imagine all those yen pairs went up. They want to take those, they want to bring their money back. So what they do is they sell those positions and return the capital back to their account in their home country. Okay? Now, I don't know how long this move is going to last and how serious it is. That's up to the market, and that's why I use technical analysis. But I want you to understand the cause and effect, because this will happen again and again and again over your trading career. So as soon as you see things that'll move money, be prepared. Okay? For example, a massive earthquake and tsunami in Japan. What do? Buy Japanese yen. If you buy stock, if you're a stock trader too, buy large construction companies that are in the stock market in Japan. The big ones that are going to get the big government contracts to clean up the cities that have been destroyed. Okay? But you got to do it within the first 5 minutes of you hearing about the earthquake. If you show up 3 hours later, you're probably way too late. Those stocks are probably up 30, 40%. Okay? So you should always have like this book. Maybe this is homework for you over the new year. You create a book of cause and effect. If there's a Chilean strike or a massive earthquake in Chile, what do? Buy copper as fast as you can. There's geopolitical risk in the Middle East, buy oil, maybe Canadian dollar as fast as you can. Okay? Earthquake in Japan, buy Japanese yen. Why? Because all the Japanese have invested their money globally, as we've talked about before. Well, when there is a massive earthquake and people have lost their homes, it seems pretty normal that they're going to need some cash. So they bring some money home so they have cash. Well, it's millions, it's tens of millions of families bringing probably pretty big money home, 50, 60,000 US dollars worth, because they're going to need some cash, right? Banks might be closed for a long time or whatever. They got bills, right? Right? All that money will come home. So always think about cause and effect, cause and effect, cause and effect. Okay? Cool. Anyway, so geopolitical risk, oil should go up. Geopolitical risk in the Middle East. Oil should go up, Japanese yen should get strong. All yen pairs should come down. Potentially Swiss franc as well, which is another safe haven. Potentially the US dollar, another safe haven. Okay? So let's just take a look and see what's happened. CAD should be affected less than all the other yen pairs because of the surge in oil prices, right? But look at this. Okay? Down, 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 up, up, sell. Look at the trade plan. I think this was yesterday's swing trading group. Okay, we were in here though. We are at the bottom. So I said, we probably want it to rise back up and then drop. Look how fast it actually happened. I know, right? You see, guys? Oops, delete. We were here in the swing trading group, and I said, you know what? We need this to come back and then drop it like it's hot. So now I would think something like this. Play it like a role reversal. But look how quickly I drew it this way. Look how fast. Nice. Okay? But this should be the last one you actually short in this particular situation. Remember, this isn't just a global take profit. This is an exogenous supply shock. Okay? It's cool, right? So CAD would be the last one you sell. So this really shows you the strength. So it only fell from, let's call it 83.5 to 80 to 83. It's only like 50 pips, right? Some of the other ones I'm up 300 pips. So you can see this was the less good, but it makes sense. Okay? It's less good, but it makes sense. Cool. Let's take a look at euro. All right. Let's get rid of this. Pachow, pachow. Okay. Let's get rid of this. Oh, I don't want to get rid of that. Just trying to clear this up. Cool. Some of this stuff we only did yesterday, right? All right, cool. So up here, we talked about this a lot yesterday, so I don't need to go into the reasoning of why anymore, right? But we were here. I'm short in that circle. Okay, I'm short at 122.50. And 3 days later, we dropped down to 120. So at one point, I was approximately 250 pips profit in 3 days. Cool. Now only up 200 pips profit or something. Okay? So now what? Now we're thinking maybe kick off the 5, kick off the roll reversal. Okay? If it goes higher than the roll reversal, I will not take a second chance. Okay? How many people knew before the Christmas break that I was looking to sell euro yen? Only 2 people? So everyone else is just shocked, like, oh my God, why did he do that? Yeah. Well, I just want to make sure you're on, we're following each other here. Now, do you remember when I said there's nothing on this chart that says this? Remember that? I'm like, don't look at your chart for this. There's nothing on your chart that says this is going to happen. Nothing. And I said, this is why you need to have strategy first and then tactics to confirm or deny. Okay? Now, that being said, could you have played this double top like I did, or was I being reckless? Right, Jesus, I want to make a comment on Jesus's comment. I want to comment on his comment. Okay. How many people remember December 12th? Like that being a key day that I talked for weeks and 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 weeks. Max, about $99. That's a major difference right there. Okay. Yeah, it had to do with the Fed meeting, right? But it also had to do with the logic of me preparing. By the way, this is the 12th. How does that smell? So according to that plan, oops, that's funny. Now where's my eraser? Silly pen. Okay. Now I got to delete that too. Silly pen. All right. Now, isn't it interesting that that might be the top? That exact day might actually end up being the top. That's crazy though, right? It's actually the day after the Fed day. Right? And then it happened to be Brexit day, but I made that call months before we even heard of Brexit being on that day and stuff, right? So it really had nothing to do with Brexit. But it's just interesting that the market hasn't gone higher than that day. I mean, it's interesting, right? Quite a coincidence. All right. So anyways, going back to this, I already have it marked, but let's just be clear. The next move might be interesting here, but I'm cautious when we have high velocity. And I've said this before, so I want to make sure we're clear. When we have high velocity, the markets tend to behave a little differently. So I wouldn't treat this as standard boring price action, but it is what I'm looking for. But don't be shocked if it, if it does that. So you have to be extra cautious. Don't be certain. Every time the market moves quickly, don't be certain it has to do this. Now, that could be your plan, and that'll probably be what happens. Okay? But as we approach 121, do your job. Use your technical analysis on smaller time frames to confirm the resistance, right? So this is plan A. This is plan B for now. Cool, right? Insane coincidence, right? Cool. That's not what I'm teaching on this, Peter. Okay? I'm teaching you to prepare. Okay? That's all I'm teaching you is to prepare and think days, weeks, and months in advance. Okay? Cool. By the way, would you grade my entries pretty well? If you were analyzing my trades, like, are these logical, intelligent trades? A plus. Like, right? Cool. Would you guys do me a favor? After today's video, would you leave me a testimonial? That you've been with me for weeks and months and maybe even years? And that I'm having a positive effect on your life? Well, Greg, what I was teaching is that I'm hoping this goes farther and lasting for a couple more weeks. Okay? So I'm not teaching you to make a quick buck. You can, but I'm not managing your trades for you. Right? I'm not putting you into these trades. I'm not managing your trades. Right? Just in the comments under today's video. Okay? Thank you. Okay. So I've even lost who asked for the take. Oh, Greg. Okay. So I'm worried, Greg, and I hope you appreciate this. I'm worried that people just do what I say instead of learning. Right? So I don't want to manage these trades because I feel like in that scenario, people just do that too. And like that's not the purpose. I'm trying to teach, right? What is my mission? My mission is to teach you how to be a professional trader. And some of the requirements is that you learn how to do your own analysis, plan your own trades, and so on and so forth, right? I don't want to just be an alert service. That is so boring, right? Right? So in this case, we can talk about it, bring it all together. Now it's happened. But you know, this idea that we've talked about it for weeks and then it happened, and right? We do this all the time, over and over and over and over and over again. So anyways, what I would love, Greg, is that this moves like a traditional swing trade. So look at what I'm thinking. Okay? So there's my trade plan. Okay? Everyone in the swing trading group knows about that trade plan. So I would love it, Greg, if it drops all the way there. But if you're worried about that, or you have your own trade plans or whatever, like for example, could you take profit here and then sell a lower high? Yeah, totally, right? So Greg, your plan could be this. And I'm not even saying that's wrong. Right? You see what I mean? But that's your decision. That's not my decision. Cool. I think we get each other. Yeah. And the different time frames. Yeah, you got it. Oh, what did Max? If you could, what can you do? Oh, Max. Yeah, if you don't want to do it, don't do it. Right? Or if I have to sell you reasons why you should join the swing trading group, don't join the swing trading group. So, yeah. Cool. La 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 la. Okay, Kiwi. Now, I actually missed this one, and I was really bummed out about it. Okay. This is a weekly sell. This is a monthly sell. And I don't know why, but I didn't sell it. So now we've hit our weekly target. So going back to Greg, can you take profit here? Oh, for sure. And then where would you sell the next trade? And that would be here. Is one way. Remember, there isn't one only way to manage a trade. There are potentially, I don't know, dozens, hundreds maybe of ways to manage a trade. But one way is down, take profit, let it fade up, and then down again next week. Oh, is that right? Is that what I said? Yesterday you said it did not give you a double or triple top like the other pairs were. Yeah, I guess so. I feel like I should be on it. This one bums me out a bit. I feel like I was supposed to be on it. Maybe I don't know, whatever. Just who cares? Okay. But somewhere in here I should have been on the clue train. Cool. So now the other ways you can mess around with this is mark your lines. I'm assuming you do all of this, right? So there's something there. There's something here. It's all kind of the same thing. So it's just like what I just drew. So there's a cell here you can clearly see. And then there's a cell here. And there's a cell here. Okay, so there's a sell at 30, 40, and 50. Okay, so if I was bearish, I don't know if you're bearish or not, but if I was bearish, I would look for this, this, and this. Well, the yesterday part. All right, so let's make it. Someone says, I didn't like it yesterday. No, I get it, Max. I don't like doing it. That's all. Well, some person is now spamming you guys. Do you guys want to see the spam that Michael Vincent posted? He's trying to get you to go to someone else. You could email this guru. He will consult with you. You guys want me to give you the spam, or should I just delete them forever? Amazing, like that would work, huh? All right, so I'm going to hide this person. Gone. Michael Vincent is now in scumbag purgatory. All right, I just thought maybe you wanted that. Consult with him like that. Consult with him. Okay. Oh, Picari says, yesterday I bought your $5 toolbox. I wanted to ask, I like to scribble over my charts when using your templates. They get deleted. Is this... What do you mean by scribble? Scribble over my charts. Because you should, like, when I do things like this, okay, that will stay there forever. So here's what I'm thinking is happening. I think you use your charts differently. I see most people use their MT4 improperly. They have like 10,000 individual charts open, or they have one chart open and they keep changing the currency pair, right? And therefore, every time you do that, it deletes. That's not how you use MT4. So for example, what you're supposed to do is look at this big space here as an individual working space. And you have to ask yourself, what information do you want on this working space? Okay? And what you should do is then add all the different charts that you want on this space. So in this space, I want to see all pivot points for Japanese yen pairs. So I'll load a bunch of different charts, each with pivots, each with a different yen pair, and that's how it serves its purpose. But I might want another one focused on one pair. So we'll look at USD Mexican peso. So here's a whole new workspace. This is called a profile. And I organize this one differently. So they're all USD Mexican peso charts. And I want this one to be that wide. I want this one to be that wide. I want this one to look like this. I want this one to look like this. And let's make some changes here. I want this to be a daily chart. Therefore, I don't want pivots on it. I want this to have a different template. We'll call this the scan one. So there's my daily chart. And for some reason, that is not USD Mexican peso. So let's change that. USD Mexican peso. Cool. So I want this chart to look like that. The 4 hours, fine, but I probably just want monthly pivots. So I go template, monthly pivots. Cool. And now that's what that looks like. And then this, I want to be a 15-minute chart, so we'll make it look like that. We'll give it a little more room. And in this one, I want to have it as, I'll just make one up. I'll do it like the standard one. So this one has oscillators, so I can see overbought and oversold conditions. And then lastly, on here, I want this to be, let's say, also a 15-minute chart, but I'm looking at more data, and I want to make sure that this has both weekly and monthly pivots. So I get kind of an idea of where I'm going as well as where I've been. So these are all different, right? And then I want to write something. So this is your scribble idea. And we'll make this super bright pink, red, and I'll label it hello. Okay? Cool. Now, check this out. I will save this whole workspace so that it's always available to me, and all these charts, like the word hello, will still be there. So we will then go to File, Profiles, Save As, and we'll save it as Jibber Jabber. Okay, that's the name of my profile. Jibber Jabber. So here's the interesting thing. I can go to gold. And the last time I had gold, okay, I wrote crazy easy sell zone. Now this is from a long time ago. Can't remember where. Obviously more like this. Okay. But now I can go to my profile that says Jibber Jabber. Okay. Jibber Jabber looks like this. USD Mexican Peso 15, USD Mexican Peso 15 with the different pivot points, the word hello, the 4 hour, the daily. Okay? And that's what these are, a collection of profiles. Okay? So if you just start dragging other currencies onto this one chart, so a lot of people just do this and drag different currencies onto it. So they have their chart set kind of like this. And they just start dragging. They're like, oh, let's look at the pound kiwi and all that. And it starts changing things. So maybe it doesn't get rid of the hello, but it changes other things. Okay? And it's not really the right way. Another thing I see often is people go charts. I don't even know how to do it wrong. File. How do people do it to change their charts the weird way? I don't even know. They do it some other weird way. File, view. See, I don't even know how to do it the wrong way. They switch charts some weird way. I don't even know how to do it the weird way. So anyways, what you're supposed to do is move amongst your profiles. Okay? You're supposed to be doing it from here. It's so much faster. On the window. It's up here or something, right? I don't even, like, it's weird. That's indicators. So I probably deleted, but Most people, it's funny, most people just don't use it right. And they're very inefficient. Okay, cool. So anyways, we're on dollar pairs. Let's see if the dollar is going to get strong here. Yesterday's trade plan was to let it rise up to 131.50 and sell it. So let's go to a smaller time frame. And it didn't quite get there where we were here. And yeah, it actually did. Let's see if this is a 15. I'll switch to a 15. I can't even fit that in there. So at the time we were here. Where's my drawing tool? Oh, it's over here. So at the time we were here and I said, you should let it go up and then drop it. It just happened a lot faster. I thought it would take the end of the day to move 50 pips. Apparently it happened in minutes. Oops. Let me go to an hour. So you see that? Instead of taking, 12 hours, it took 2 hours. And it dropped to the next level. So now right? Do you have scans only for majors and stuff? Yeah, because here's what I actually do 90% of the time. 90% of the time, I'm only trading 3 pairs. So I tend not to look at crosses because I'm a macro trader. And out of these, there's probably only 5 currencies I trade against dollar, and the same 5 versus yen, and the same 5 versus Swissy. So I bet you 90% of my trading is 15 pairs. Okay, so I don't tend to look at pound Kiwi. There might be good technical setups, which is perfectly fine, and I'm not saying anything wrong, I'm not saying that pound Kiwi is bad. I'm saying I don't look at it, me personally, because I'm making more of a macro play, and to put crosses together like that has to do, let's say, more, not completely, but more to do with technicals and fundamentals. Now you might say there's micro fundamentals of the Kiwi and micro fundamentals of the pound, which is fine, but I'm looking at macro, like global macro. So I'm saying, what is the entire world doing? And in doing this thing, how are they treating the Japanese yen? How are they treating the US dollar? So I'm, right? Jimmy, that's next week. So you see what I mean? So I'm not saying it's wrong. I'm just saying I don't do it. Generally speaking. I can do it. Now, with things like Brexit, if you're just bearish on everything pound, then that's great. So now you're looking at pound and you're isolating pound, and now you could play the Kiwi against it, but you're doing something different, which is fine, right? Okay, you see what I mean? All right, hopefully. Dollar, maybe a nice little move. It's pretty early in the game here. You see it's come down into dynamic support. So a bear would want to see this in the coming days. Aussie, a lot more analysis going on this one. It's a little more complicated. But you can see what's going on here, don't you? Cool. So if you're a bull, actually, on Aussie versus US dollar, now's the time to seriously think about getting in the game. you'll probably want to see something like this. But you'll see it's a continuation of the past. Okay? And you're at rule reversal support. So if you're a bull waiting and you've waited this whole time to get in, you might have your opportunity. So up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, 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 buy. Up, up would be your next thing if you are a bull. Okay? If you're a bear, we'll look at it kind of this way. There might be an up, up, down, or a break, pull back down. Okay? Once again, all of this is easy if you know your bias. If you don't know your bias, you're doing absolutely everything wrong. And the longer you deprive yourself, the longer you skip doing the work and making the decision, the longer you deprive yourself of your destiny. Okay? So like if you are a bull, that's like dead stupid easy. It's like ridiculously stupid easy if you're a bull. You got the role reversal, you got the central pivot, you got next week's M2. Like what the heck are you looking for if you're a bull and you're missing that, right? So you're either already long or you're going to be long on the next pullback. But like if you don't see that, you're missing the whole game. You don't even see the field, right? And that's what I would focus on if I were me and my mentor and coach said, "Are you a bull?" And you're like, "Yeah, I'm totally bullish on this." And then they say, "Well, this is a stupid easy setup." And you're like, "What setup? I don't even see a setup." You should focus on that. Like, why not? What, right? Okay. Rebs is waiting on the 4 hour for, you shouldn't enter, in my opinion, Reb. So I'm not saying you're wrong, Reb. But I'm saying I don't think you should wait on a 4 hour chart for an entry. Okay. So, but it might work out the same, I suppose. I think, or at least the way I teach, Reb, is that your strategy is likely set up on a 4 hour. But once you're here on your 4 hour support, drop into a 15-minute or even a 5. And, right, start using the technical analysis to get in. So like, you should have known days ago that you were going to buy this level here, right? So once you get there, and of course this has been a few hours now, but imagine you were on your 5 hour or 5 minute chart, right? Seems like if you knew you were going to buy here, I mean, days ago you knew you were going to buy there. I even drew this yesterday or the day before or last week or whatever, but we knew more than a day ago that this was a buying price if you were a bull. So, you know, for this to behave that way at that exact price, chow, right? Or the next thing is, you know, the double bottom, right? There, that would put you in, or a higher low, right? Or my ultimate favorite, my favorite of all favorites, double bottom, higher high, higher low, long. So you're long here. Let's do this in some other funky color. Let's do this sort of pukey brown, yellowish. You're long here, or you're long here. If you're a bull. Now, if you're not a bull, that's where you take your profit or you wait for your next bearish sell zone. Okay? And you might be back on a 4 hour, back on a 1 hour, and you might be saying, well, I'm a bear, so I want to sell in here somewhere. For example, That would be a great trade. This up and down scenario. If you're a bear, fantastic. Will it work? Oh, I don't know about that. Okay. So that's using swing trading. Another way of playing this, if you're a bear, is price action. And you're going to kick off the dynamic level of resistance. So you're saying right around this area between, what is this, 60 and 75, you're going to get short. So now you move into a 5-minute chart, and you right? You see how on a 15-minute chart, that's an important number? Let's go back. I want to show you this. Hourly. Okay? By the way, how many people read my book? Okay? And it says things like, if you're bearish and below the 21, you're aggressively bearish, right? And the standard operating procedure out of the book is down, 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 up, up, sell. Okay? Do you ever wonder why I chose these numbers? For example, like this says sell, right? Let me add something I rarely add. Where's that little arrow tool? Insert arrow. Down. Right? Check it out. That's why it's there. Look. Hey, look, it's a 5-minute chart. I just went from a 1-hour chart to a 5-minute chart. And we know this is the 1H21 EMA. Greg, ISM 47.8. It's manufacturing. Who cares? It's 7% of the U.S. economy. 93% of the U.S. economy doesn't give a damn about ISM manufacturing. Oh, yes. Would you be so kind to leave a thumbs up? Thumbs up. Yep, Greg, it's all about the services. And yes, we have the meeting minutes. Don't call it FOMC. When you say that, that means something completely different. Say meeting minutes. So anyways, going back to the book, this is classic, right? This is the classic move here. Okay. Only technical analysis. And then let's take a look at some Swissy pairs, if you don't mind. Or should we do gold and oil? Let's do oil, in fact. Let me just move on. Let's do oil because Brent is interesting because we hit 70. Okay? And that's interesting. 70 is a big psych level. Now, it's also a monthly R1, which I'm not really concerned about. Okay? I think this has legs to go to like 73. Maybe not today. Depends on if there's a quick response from Iran or not. For simplicity, Wayne, with one eye closed, would you pick your bias based on the 200? No, my bias is fundamental. And 200 EMA is a neutral zone as well. Okay, Banda? The 200 EMA is neutral. It's the fair market value. Actually, Stephen, what you're describing is a reversal, how the market reverses. The foreign exchange market reverses like an old man easing into a hot bath. Yeah. So Benda, looking at the 200 EMA doesn't help me with trend per se. It represents the trend in the fair market value. Okay. But like there's other things going on here. For example, up, 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 down, down, buy. 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 Up, right? None of that really has to do with the 200 EMA. But on Brent, for example, I'm fundamentally bullish. Okay? And I have been for a very, very long time. Years. That's what I like about fundamentals, is that they don't tend to change very often. Okay? Okay? And the great example has to do with WTI. So more recently, we were facing $40 a barrel after a sharp decline. And I said, right here, right now, you choose. How many people were around for that? How many people remember that? Like you were there when it happened. And I say, it's time for you to make a decision. Now that we're at $50 a barrel, I think we're more like 51, but it doesn't matter. I said, you choose. You decide, is this going to $40 a barrel? Or is this going to $60 a barrel? And I said, you can do this based on technicals, you can do this based on fundamentals, or you can flip a coin. And I said, I'm bullish, but I have my own reasons. And I can be wrong, but I've made a decision. That's my decision. You make your decision. And then from that moment, only do that one thing. If you're a bull because you think it's not going to go below 50, and really I said that's your real choice, that it's not going below 50. I say you can go higher than 60, but your decision is it's not going lower. We're done with this retracement. It's staying above 50. That's that. You made your decision. And I say that's called a bias. Now, I can give you all kinds of fundamental reasons why I think it's going to go up. But I say you can simply flip a coin. And if you're a bear, you're probably not going to get very many setups. Well, in this chart, there is no setups for you. So you can look at this and like, there's a buy zone, 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 right? Cool, right? Maybe you prefer pivot points. There's a buy zone, there's a buy zone, there's one. Well, we didn't get that pullback. There's a buy zone, there's a buy zone. So this hit at like M2, central pivot, missed, pivot, pivot. So out of the last 6 weeks, you got 4 positive entries and no sell positions. Right? I'm telling you, once you make a decision, trading will get easier. You're making it very complicated by trying to be a bull and a bear. And you should probably admit to yourself, not only is that not the way to trade, but you've been trying to do it and you're not good at it. You need to remove pride from your trading. Just say, right, and I'm assuming you might be here because you're not very happy with your trading results. And then very often I hear like, Wayne, when I come to your webinars, it looks easy. And then when I go out there, it's difficult. Yeah, well, I have plans, so therefore they're pretty easy. And you don't have plans, so it's chaotic. Like, you need to change your behavior, right? Like, these are all very easy swing trades. For example, just one style of trading, right? And let's do this too. Let's go to indicator list. 1 month, 1 period. Let's do 4 periods. Let's see how this works. Okay, let's take a look. Okay, this is where I said you need to decide. So there's price action since then, right? Oops, I have to clear everything. So this is when I said you need to decide, when we attacked 50, okay? And of course we had this one too, right? So there's our bottom. That's the decision. Is that the bottom, yes or no? So let's do some basic swing trading. This is a buy on the first day of the month. Here's a buy on the first day of the month. I'm sorry, in January, it was way too bullish. And by the way, you could have been buying this. Absolutely, for sure, could have. But these are all basic swing trades on the exact day you would expect these entries to occur. So you know the day to be ready and do it. Like it's not difficult. You just have to do the work. And that's the difficulty. Frankly, most people's difficulty is they don't do the work. No, Banda, we're probably both going to be profitable. The question is, Banda says, hey, Wayne, if you're a bull and I'm a bear, should I be worried? Absolutely not. Absolutely not. Because you will see that your bias will only let you trade under certain rules and conditions. We call this rules of engagement. So if you're a bear and I'm a bull, you're going to sell at resistance. You're going to sell situations that look a lot like this. And I'm going to wait around for conditions that look like this. And both of those will occur over the medium and long term. And I'm certain at the end of the year, we'll both be profitable. One of us, however, is likely to be more profitable than the other simply because their bias put them in the longer, bigger trend. So if over the course of a year, oil went from 50 to 70, which is a nice percentage, by the way, whoever was a bull will make decent money. But whoever was a bear will also have opportunities to make money. Okay? So this person made 40%, and the other person probably only made 25%. Okay? If you lose money, it's because your trading sucks. It has nothing to do with the market. Okay? The degree to which you are profitable has more to do with the market. So you're trading with the market instead of against the market. Well, if you're trading with the market, with the trend, by definition, you will do better than if you traded against the trend. But if you're losing money, it's because your trading sucks. And you have to be okay with that. You have to admit it. If you get all upset when I say that, this is one of the reasons it's holding you back. You have some strange pride attached to, I don't know what it's attached to. I mean, you got skeletons, right? You got to separate yourself from that. I'd rather you see reality. Reb says was losing because of greed and stuff. Yeah, well, those are the things, right? Greed and fear and all these things. But all of that comes from not having a plan, Reb. If you don't, right? Like, greed is when you do things that are unplanned. You're trying to go for more. You're trying to do more. Well, all of that is because there's no plan. What do you mean do more? What was your plan? Show me your plan. Where it said make 6 trades in 6 minutes. It doesn't. Right? Right? All that kind of stuff. Or fear of missing out. What do you mean missing out? Show me your trade plan. Like, I'm doing stuff days and weeks and months in advance. What do you mean miss out? Right? It just means you didn't have a plan. So one day you will hear me. Something will happen. But one day it'll click and you'll hear my voice. And you'll focus on your trade planning, not your trading. You see what I mean? And you'll focus on tomorrow, not today. If you're just showing up to your charts and making a trade plan for today, you don't know what you're doing. You don't know what you're doing. If you're just showing up today, what are you going to do today? I'm really good at technical analysis. I'm going to find some trades. Dude, what the hell are you doing? All right? Go play Fortnite. At least you'll lose less money. So I want you to focus in on being a business, right? Be a business. What is your plan? What is your strategy? All businesses have plans and strategies and budgets. How many Fortune 500 companies don't have a budget? How many Fortune 500 companies don't have a plan? How many Fortune 500 companies besides Microsoft just wing it? None. So your trading shouldn't be any different, right? Imagine going to Harvard Business School and they're like, yeah, you just do whatever, man. Right? You go to class and the professor's like, yeah, don't worry about it. Just make it up as you go. Like, they don't teach things like that, right? So we need to add a plan and a strategy and a business mind to your trading. And you're not worried about how to make 20 pips today. Like, you log in, you're trying to make 20, 25 pips today. Dude, pennies, right? I want you to focus on what are you going to do in 2020? And what is your bias? Answer one question. What is the stock market going to do in 2020? Have an opinion. You get paid in this business to have an opinion. Now you have to back up your opinion with trade plans. Gavikalo says crash. All right, cool. Now give me 3 reasons why the stock market's going to crash. Why? We're at full employment and everyone in America has a job. Wait, if everyone in America has a job and is earning money, then they spend money and they buy their children $300 AirPods for Christmas. That doesn't sound like a crash. Maybe inflation's high. Oh, wait, inflation's zero, right? Well, maybe money's expensive. No, wait, money's free. So I wouldn't say we're ready for a crash. Now, there might be a catalyst down the road that could create that. But if you're just objectively looking at the economic situation, you should be able to put together a model of the economy. So like if you walk into Harvard and your professor says, what's the stock market going to do? And you say crash, dude, you're out. You're going to go to night school at the community college, right? So what would you write down on a piece of paper to justify, and don't say crash, right? That's so much fear behind it. Again, let's use Harvard. What's the saying for Harvard? Veritas, right? Truth through enlightenment and knowledge. You are the Illuminati. When I graduated from Harvard, I got my lamp. I literally got a lamp because I'm part of the Illuminati. Now, let me tell you, the Illuminati lamp is made out of plastic. You're like, what? I gave up a swimming pool and a Lamborghini, and all I get is this stupid plastic lamp? But anyways, part of the Illuminati, right? All right, so now you're the Illuminati. You don't say things like crash. That's about fear. You're Illuminati. You don't have fear. You know the future. How do you know the future? You do analysis, you look at the facts, and because of your giant brain, you can help predict the future. Crash is not in your vocabulary. You got about 5 different ways to make money. Okay, now if that means the stock market's coming down, you're going to make money as the stock market goes down. Or if the stock market's going to go up, you're going to make money as the stock market goes up. That's what makes you a Harvard man or a woman. Cool. So let's talk about that then. What's going to happen in 2020? Don't say crash. Okay. In current market conditions, today, the 3rd of January, there's no inflation, there's full employment, and the Fed is stimulating the economy by making money cheap. Doesn't sound like conditions for a crash. Cool. What would need to happen for a crash to occur? A war? Well, certainly not risk on. So that could be an interesting catalyst. A major terrorist attack? That also could be it. So why don't you put these things down? And I am not joking. Get out a binder and write yourself notes and then put them in little tabs. If there's a terrorist attack in the United States, what are you going to do? If you can't do that, you don't know what to do. So therefore, you should do some research. Take the courses at FX Bootcamp, do some reading, take a college class, but you should do something. You should at least admit that you should know this stuff and that you don't know it now and you're going to work on learning that. Okay? So what are you going to do if there's a major terrorist attack in the United States? Write that down. Leave yourself notes. Because if it occurs, you're upstairs, you're having a glass of wine with your lover, and then your phone goes pa-ching, pa-ching, and you lift it up, and there's a terrorist attack in New York City. You just drop the wine, and you run to your computer. I'm not joking, right? Run to your computer, grab the book, open it up, terrorist attack in the United States. Boom. Do this, do this, do this. It'll help your head, right? Knowing that you thought about it for hours and you took the time to write it down. Now, under the duress, you just go there and do that, buy this, buy this, buy this. And you run to your charts and you start using technical analysis to get in on that. Okay? There's an attack on Saudi Arabia. Oh, that's on page 17. Oh my God, do this, do this, do this, do this. Jump to your charts, open up. Now you don't just blindly throw in, but now you're using technical analysis to get into those positions. Stuff that you thought about maybe for hours and documented it, right? So you have clarity, but then you gotta move in the moment. But this is what we do. So now, let's make it less abstract. Will the stock market go up in the first 6 months of 2020? Yes or no? And then, what would you do to make money? Okay? Then, second half of the year. That's really abstract because we're so far away, but you can think about it, and then you can revisit it in July. What will happen going into the US election? What will happen if the same White House is in place for the next 4 years because Trump wins? What happens if there's a new White House? What happens to each individual candidate? Now, right now, there's probably still 27 candidates, but it's Biden or not Biden, really. Okay? So if Biden wins, what do you do? If someone else besides Biden wins, what do you do? And all this kind of stuff. Now, that gets very esoteric. That's fine. But the point is you're thinking about it. And you're kind of creating the same type of playbook. Okay? If the stock market's going up, is oil going down? If stock market's going up, is copper going down? If stock market is going up, is the Japanese yen strong or weak? If the stock market's going up, is the Swiss franc strong or weak? If the stock market's going up, is the US dollar strong or weak? I'd rather you spend time, like you should be spending entire weekends. How many times have you heard me tell you that you should have a business planning retreat? Take your whole entire trading firm, aka you and your dog, and spend some serious time, I mean an entire weekend, planning and thinking. Okay? But do you see how certain I am when I do my stuff versus some person that just logs in today and goes, what should I do today? Is it easy to have missed the last 2 or 3 days of trading? Let's look at a pound yen. Let's just pull one up. Pound yen, the beast, right? There we go. If you had no plan, okay, you had no plan. Let's go to hourly. Would it be easy to miss that? Yeah. And the funny thing is, I think what happens to most amateurs is they log in during this period where it's risen for 8 hours. And they're buying in here on a 15-minute chart. Okay? They were making money for a while, boom, they lost it. And then they were making money for a while, and then boom, they lost it. Versus just that, right? So it's this planning that makes you a professional, guys. That's all it is. It's your planning. You have a bias. You can discuss it with somebody. So therefore, you have to have some criterion for your reasoning. And also because of your technical analysis, you can carry out your trade plan. That makes you a trader, not an analyst. So if you're good at the analyst part, you're worth $65,000 a year. If you're good at the trading part, as well as your analysis part, you're worth $650,000 a year. But you can't be a trader without the analysis. So you got to say, I got to master the $65,000 question before I can master the $650,000 question, right? Cool. Any last questions for the before we have a lovely weekend? Prince, I don't think you can live in New York City only making 650,000 a year. I mean, I guess you could, but you wouldn't live very well, right? So I've known younger people in New York City making like 300,000 or 400,000 a year, and they live in a doghouse. A doghouse. Oh, like, oh, thank you for inviting me over. We're you have such a lovely kitchen, living room, bedroom unit. This is great. I can sit on the toilet and watch TV. This is great. This is what so wonderful. No, it's true. You walk in, you're like, "How much you pay for this place?" 3 million. You're like, "Yeah." Is that right? Yeah, it's funny, right? You're like, "Oh, how cozy." So, anyways, yeah, you got to make big money if you're going to be in the big game, right? Uh, TBM, why is the Baker Hughes oil recount? I only track it when there's when when we in extreme scenarios. So I don't think it matters anymore. But when we had too much supply and then not enough supply, it mattered as we added rig counts because it means more potential supply in the near future. But at this point, I don't. I don't. I mean, look, if all you traded was oil and you're an oil expert, like that's all you do is energy, then yeah, you should have that and talk about it and with your clients and all that kind of stuff. But I think you can get a lot of that just purely out of the IEA stuff, you know. Um, but when when uh, when oil was at like $30 a barrel or something, it mattered because it showed that, like for example, you're not gonna. So when you have a rig in mothball, right? It takes a lot of money to clean that sucker up and get it producing again. So you're not going to do that until oil prices are high enough for you to be profitable. So it's kind of showing different little aspects of the market and how many opportunities are there to make supply. And if you don't have enough supply, that's important. Or if you have too much supply, that's going to be important. Okay. Do gold. Okay, we're at resistance. Done. Look, there's gold right there. You see it. I'm at resistance. Done. Okay. You guys need to start taking bigger looks at things. This was set up for you 2 weeks ago. So you should know all of this. Like, if you did something with gold now, you're either way too early for the sell or you're way ridiculously late for the buy. So there's just nothing to do, man. Now, if you're on a 15-minute chart, this is what you're looking at, but you're not looking at it properly. I've had this as a do not buy zone for about 3 months. So it's still not a do not buy zone. Or it's still a do not buy zone, right? And it's way too early to sell. Now you might say something like, well, Wayne, under the geopolitical risk that we now have, this will go up. Great, it's still a terrible place to buy. And you're way after the fact, right? So we knew that this was the idea. And the future idea under normal market conditions is this. But of course, the geopolitical risk is changed, but it doesn't make this not resistance anymore. It's still resistance. So now your next move is probably out, down, and up. And you'll say, well, Wayne, I skipped all of this normal boring trading, but now I want to get involved way up here because of something that has now already happened. And I just got to get in because I have a fear of missing out. And I'm like, I'll just say, I have no idea what you're talking about. I don't understand that language. I'm like, what language is that? Or it sounds Martian to me. Right? You skipped all the easy, boring stuff, waited for the news to actually occur, and you're willing to buy it at resistance while it's overbought because you have a fear of missing out. I don't know what you just said. Must be Bitcoin. Like, really? Was that poetry? Right? Wow, was that poetry? Like some abstract? Are you speaking in tongues? I just... So anyways, yeah, I don't know. You can't do anything here. So that's the funny thing, like talk about gold. Yeah, there you go. Can't do anything. I wouldn't do anything with that. Anything else? The CAD yen was the least great. So I'm just, looks like it's just farting around. Looks like I've given back about 150 pips. USD CAD, okay. 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 There. There it is. So here's the December sell. Here's this December second chance. You can see I already have it marked here, and then the second one marked here. Okay. And now we have the geopolitical risk moved. And we're on the January M2. So Prince, pick one and focus on the one. So guys, you'll notice this is OOP. Under those circumstances, very often, but of course not always, you hit your target early, and then there's a counter trend. So I would expect up, down, and then depending on when or if we hit this, maybe we counter it. That would require the US stock market, so we'll put stocks down. Bonds up. Oil down. Okay, one scenario. And if so, this goes up. So I asked earlier, let me ask one more time. Will you guys leave me a testimonial on today's video if I've been helpful to you over 2019? Like if I've made a meaningful change, not like, oh, he's funny, or yeah, he's a great. No. Will you document like in a testimonial type fashion if I've actually made a difference in your life? Will you document that by coming to my webinars and hanging with me for weeks, months, or even years? Will you actually document that I've had a real, meaningful, positive, impactful, profitable result on you? I would appreciate that. So I could, what I'll do is I'll clip them and put them in my little treasure trove, my little treasure box. It'd be nice for me to know that this is more than just entertainment and fun. I mean, we can be entertaining and fun, but I want to know if my effort is worth it. Would you do that for me today? So it's all in one video, not 27 videos. And of course, if you're new, just subscribe and do the thumbs up. But if I've been a positive influence on you, your life, your trading, then please would you leave a meaningful, well-written testimony? That's a pretty big ask, I understand. Well, I would appreciate that if you could. So, peace on earth. Here, let me go full. I always like to do this full. Got to turn my drawing tool off. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. Thank you very much for leaving me a testimonial on today's video. And I will see you on Monday morning. Namaste.